pet taco.
Web video has grown up. Distinguish yourself with professional custom video for your business. Get started at johnlothianproductions.com.
How would you describe the regulatory environment surrounding FX?
The FX market, I think, is really facing a great deal of uncertainty when it comes to regulatory mandates, specifically those emanating from dodd-frank regulation. What we have seen is an evolving regulatory mandate where spot, of course, was exempted quite early on in the process. But as dodd-frank has continued to evolve, the uncertainty has only grown as to whether or not swaps and forwards are going to be exempted as well.
What is the status of high-frequency trading in FX?
Earlier on, I think the lack of sophisticated risk management systems at some of those dealers led them to essentially turn off access to particular high-frequency trading firms that were sending them so-called toxic order flow. Over the last several years, however, those same dealers have really significantly upgraded their systems, and the type of order flow that I think that would have been considered toxic at one point is now actually welcomed. And so I think both the dealer community and the buy-side community are kind of adopting and evolving as kind of the demands of high-frequency trading become more apparent.
Do you see any big changes in the FX market structure?
The overall structure of the FX market, I believe, is not going to change as significantly as some might have expected following the introduction of dodd-frank. I do not think that high-frequency trading necessarily has the same impact in FX that it might in some of the listed markets. I think that certainly the tools that are available to traditional asset managers are there, and the tools are there that allow them to interact with traditional liquidity providers in a way that I think prevents or protects them from the impact of high-frequency trading.
Who do you think will bear the costs of the new regulatory regime?
I think, unfortunately, a lot of those costs are going to be borne by the dealer community, particularly from a reporting and price distribution standpoint. Again, those costs, I think, will be dependent on the final version of any regulatory mandates that come out as a result of dodd-frank. What you're seeing is really a focus on going with the types of vendors that are certainly flexible enough to adapt to any kind of regulatory uncertainty and can work both with the sell side and the buy side to ensure that any reporting and any analytics and really any type of workflow adjustments that need to be made to support these new regulations can be done seamlessly without necessarily interrupting their current workflows.
How would you frame the competitive landscape in FX?
I think we're at the point right now where technology has evolved so that even some relatively smaller firms out there can get up and running, can operate, can adhere to whatever regulations come down the pike without necessarily having a large in-house technology staff. Another way to think of it is really that the barriers to entry for smaller to mid-sized firms who want to become engaged in the FX market has really fallen significantly. We really operate as a pure-play technology platform that connects the buy side to the sell side and really streamlines how those two market participants interact with each other. At the end of the day, in an OTC market like FX, where a significant portion of that market will continue to trade OTC, there's always going to be the need for systems that can basically connect the buy side and the sell side directly.
What other FX topics are you following closely?
Algorithmic trading. That's been a relatively hot topic as of late. I think particularly in the context of evolving market structure and some of the new liquidity pools that are available to the buy side. The second thing, however, is really analytics and the role that TCA and FX analytics are playing in the market today. I think analytics actually is interesting because it really speaks more to the evolution of the traditional buy-side firm as opposed to prop traders and hedge funds. And that itself really kind of leads back to the transformation of the buy-side clearing relationship.